Hey guys, it's that Dividend guy coming at you with another dividend investing video. First off, I want to apologize. I'm so sorry. I know I've been gone for a few weeks. That was not the plan. I always plan on posting daily videos. I actually moved into a friend's house. He doesn't have internet yet. That's been a struggle, so I didn't have anywhere to post. Um, and then I also got in a car accident, and so I've been kind of rehabbing that, so I've been pretty busy. But I do want to jump right back in, so happy Friday. Hopefully you guys are having a great day, great green day in the market. I'm excited to be back. So I do apologize for the hiatus, but that's no longer happening. I have a lot of videos planned. I'm gonna start up today, and I will post every day through from here on out. I have a Warren Buffett videos I have to post. I have Elon Musk videos I have to post. I have a Jeff Bezos wealth analytic thing I have to post. So I have a lot of content, and I'm just going to jump right back in. So for today, we are down about 120 bucks. For the week, we're down 265. The month, we are up 65 65.94. For the 3 month mark, we're up almost 2 grand. For the year, we're up 1,500, and all time since April of 2018, which is crazy to say out loud. We are up $1,200. So let's take a look at the individual stocks. First of all, I did sell Disney, and I put that money into Walgreens because Disney cut their dividend, and I have to be a strict dividend investor. So Disney said goodbye, but I have made a couple changes to the portfolio and watch list, so let's jump right in. First of all, we have Realty Income, one of my personal faves. 15 shares at $45.38 is our average cost, about 4% of the portfolio. So we are down $4 today, up $2.20, up 32% on Realty. Then Altria Group, Dividend King, 148 shares at $43.84, 28% of the portfolio. That will be shrinking. We are now dividend efficient enough to buy 3 shares, which is great. We're down 63 bucks today, down 1%, down about $400 total, or 6.14%. Not too worried. It's a Dividend King, and like I said, I now make enough money where I can buy pretty much 3 shares with the help of and the other stocks that pay me this month. Then we have Coca-Cola. Again, I love this one. We have 20 shares. 51.26 is our average cost. 4.3% of the portfolio is in Coca-Cola. Down 8 bucks today, down about 1%. Then we're down 80 bucks total, down about 7.8%. Then we have FRT, the only REIT that is a Dividend King. We have 1 share, which that will change. Average cost is 113, which I can cost down average very well right now. We're down 70 cents today, down 37 total, which is a great cost down average opportunity. Then we're on to the second set of stocks with Lowe's, a Dividend King. We have 2 shares at 186. Well, this is just the opposite of FRT. This one shot up after I bought it. 1.3% of the portfolio is an FRT stock, down 58 cents today, up $98 total on 2 shares. That's great. Almost a 50% return on investment for that, which is phenomenal. Then we have AT&T, one of my personal favorites, finally below 30. If you guys are longtime watchers, you know that this was up to like 38 before, and I wouldn't touch it because it was way above my cost basis, and I didn't want to increase my average cost. And now it's below, and I'm not at work, and I can't put more in. This would have been the stock I would have bought this month on the 12th, and I would have had 100 shares. So I'm a little salty, but I have to take time to recover from the accident, and I had to take time off work, and I'm just going to find a new job. It's easier just to do that for me. So I will have to put the investing on hold for a couple months in order to get my back straightened out and make sure everything's working, rehabbing and whatnot, and then I'll find a new job, and I will, I'm hoping, at the latest is the beginning of next year. I'm hoping to do, by my birthday, be good. So just a couple months. But anyway, we would have put money into AT&T and had 100 shares, but we have 67, 30.98 is our average cost, so I can cost on average a little bit here. 9.14% of the portfolio is in AT&T, down 67 cents today, down 95 total, which is phenomenal. I hope I stay down. I hope it stays down. I hope it stays down. I love AT&T. Next, we have ABBV at 94.91. We have 60 shares. 72.22 is our average cost. This one has taken off like a rocket as well. 25% of the portfolio, or 26% of the portfolio is in ABBV. Down $67 today. We're up $13.61 total, up $31.41. So that's phenomenal. Then we have Target. This started at $369.12, a Dividend King. We have 10 shares at $87.68, 5.18%. Excuse me, 5.81% of the portfolio is in Target. Up $13 today, up $3.82 total, up almost 50% on this one as well. Then we have J&J. So buy and hold works. We have J&J. at 145.76. We have 2 shares. Average cost is 135.79. 1.3% of the portfolio is in J&J. That will change. It's one of my personal faves. Down 216 today, up almost $20 or 7.34% on Johnson & Johnson. Then we have 3M closed at 150.47 today. We have 2 shares at 147.28, so a small profit there. We're down 330 today, up 639 total, so not too bad. A little bit of profit there. Then Walgreens, the newest holding, but it's an old holding. I switched it for Disney, which I probably will end up buying Disney back because I'm such a big fan. But we have 6 shares. Average cost is $39.92, so we're up a little bit. 1.13% of the portfolio is in Walgreens. We're up 54 cents today, up $4.98 total, up 2.04%. Then ExxonMobil, another one of the bigger holdings, closed at 42.16 today. 87 shares, average cost is $53.20, so we're down over $10 a share, which is fine. 16% of the portfolio is in ExxonMobil, so this is a rather big holding, up $24 today, down $9.27 total. But I'm just going to continue to cost down average. Right now I'm getting paid about $70 from ExxonMobil, so I'm getting really close to 2 shares, which is phenomenal. I'm super excited. So that's the goal, guys, is to buy enough to buy another share, and I already have that with Exxon. Then we have Aflac. We have 1 share. This was leftover money from the ExxonMobil purchase that I did, from Altria when I bought it last month. This is leftover money from that. I just bought it with Aflac. So I wanted to buy another Aristocrat. So it's one of the smaller positions in the portfolio, if not the smallest, at 35.75. So we are down a little bit, which is a great cost on average opportunity. We're up 28 cents. It's like 0.016% of the portfolio, so not even a full percent yet, but that will change. 28 cents up today, down 18 total. Then we are onto the watch list, which did change a bit. So we have Leggett & Platt, which is in contention for Dividend King status within the next few years, just like Walgreens. So I don't mind if they haven't hit King status yet. They're still aristocrats, and that still belongs in my portfolio. That's the type of value and status that I want. So at $49.09, is it a buy for me? Absolutely. With $15 of upside potential, definitely worth it. Next, Genuine Parts. I added them over Walmart because I like them better. But at $90.15, is it a buy? With about $18 of upside? Yes, I think it is. Anything with $15 of upside or more, I would consider a buy, because I like $15 to $20 is about my safe zone. Anything less doesn't interest me. PepsiCo at 137, 52-week high is at 147, so Pepsi is not a buy for me here. Kimberly-Clark at 152. I'm not buying at all because it's at 50. Yeah, wow, 50. Yeah, that's like 50 cents away from the 52-week high, not touching that. Starbucks, this one I added. I know it does not have status. It's an exception stock. There are 2 now in the portfolio. I got rid of Disney, but Starbucks has a double-digit compound annual growth rate for every single stat. For the 1 year, 5 year, 10 year, it's phenomenal with growth. So I'm willing to make an exception for Starbucks. But at $76.67, is it a buy? I say yes, because that's over $20 of upside potential at $98.14. Colgate, Dividend King, this is the start of 369.12 at $77. Is it a buy for me? No, because that is the 52-week high, 77. It's 20 cents off its 52-week highs. But Colgate is a cheap enough stock that I would consider buying it. It's not $137 at $77 a share if I put $1,000 in once I get back to work. I know it floats around these levels, like 50 to 55 to 75. Once I get back to work, Colgate will be one of the first stocks that I buy for this set of months, as will Procter & Gamble. This is one of those as well at 131.12, 52-week highs 132. I know it's at the peak of its 52-week, but I would definitely make an exception for Procter & Gamble. I want the status stocks in my portfolio, and Procter & Gamble is just one of those heavy hitters that you just buy products from all the time, even if you don't realize it. So I definitely will be adding to Procter & Gamble. Next, Caterpillar. This one's new. Construction, I think I'm very bullish on the sector, but the growth is really what I'm after. So Caterpillar is very good at growing their dividend. So they're at 132.60 at 150 for the 52-week high. I definitely would be buying it. That's about almost $20 of upside potential, and the stock's about $18, which I want $15, so it's definitely a buy. SX Property Trust. This one is one of my personal favorites because I want real estate in the portfolio specifically. This is one of my just pure real estate plays. At 220, I believe at 330 is the 52-week high. Definitely a buy. I'd buy it at 300. So with $80 below that, definitely a buy. Apple, this is the other one that is an exception, and I'm going to make a video on it going in depth about what happened with Apple yesterday. But Apple is definitely an exception stock. I'm a huge fan of the business, of the company, of the product line. I love Apple. I know it's not a status stock, but I am willing to, with the amount of money they have on their balance sheet, I don't even care. So that's the other exception stock besides Starbucks. But Starbucks is good with dividend growth, and they're very good at delivering consistent dividend growth. Apple is kind of on the flip side where they do an okay job, but they could really pump up that dividend if they wanted to. So Starbucks is for now, like getting money generated into the portfolio now. Apple's one of those plays that, like, I think 5 to 10 years down the line, it's going to be a monster dividend payer. Then McDonald's, we're now into 3, 6, 9, 12. I only have 2 stocks for this because I'm pretty heavy with 5 picks currently for this set of months. McDonald's also, just like SS Property Group, is a dividend play. So at 190, with Apple, sorry, I didn't do the stock price. So at $426, it's not a buy for me because it's 52-week high. But they're doing a 4-way stock. I won't get into it here, but at $426, no, it's overpriced. But what's going to happen with Apple? I would buy it. McDonald's is at $194. Yeah, about $17 upside. McDonald's is a buy for me. Consolidated Edison, this is the other one. I wanted a utility stock. This is a king that is a utility stock. But at $76, I would buy it. It is about $20 of upside. So, guys, anyways, that is the watch list and the portfolio for today. So, happy Friday. Happy to be back. I'm stoked. Like I said, I have a video on Apple coming out. I have a video looking up Starbucks and whatnot. So, I have content planned out. I just have to record it. So thank you guys so much for being patient. Thank you for being understanding. Thank you everybody for all of the comments on the YouTube videos that I've posted. I answered a bunch. Sorry if I haven't been super active on answering comments. I didn't have my computer. So now I have computer, internet, all that, and I will be answering comments. So thank you for your patience. I'm going to be back Friday. I'm going to try to post a video Saturday and Sunday about what happened with Apple stock, and a Warren Buffett video that I pre-recorded. So I will have content coming out today, tomorrow, and Sunday. Thank you so much for watching. Thank you so much for the prayers and the positive reinforcement. I really do appreciate it. That's one of the reasons why I was so excited to build this channel, was the like-minded people coming together and, you know, really being passionate about what we love to do, and that's investing. So thank you so much for the positive vibes, the encouragement. I really do appreciate it. I needed it. So thank you so much. I'll see you guys in another dividend investing video. Happy to be back, guys. Take care.